Inflation has been the #1 thing on everyone's minds in the business and financial world. And that's because inflation pretty much affects everything from the price of assets to the price of what your groceries will be. And now you have some top economists and investors like Phil Orlando and Mark Zandi saying that there is going to be some big changes coming for the Federal Reserve and inflation in 2022. However, some experts are warning that if inflation isn't dealt with soon, we are going to start seeing some major negative effects on our economy. Basically, they're saying that inflation will continue to grow bigger while our economy ultimately shrinks. So today I want to ask the question, is it too late to start reversing the effects of inflation, or are we going to start hitting massive inflation in 2022 and beyond? Is there anything we can do about inflation? Today we'll be talking all about that, so make sure to stick around till the very end of this video to learn everything you need to know about inflation and what's coming in 2022. But before we get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then make sure to smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world. We can keep making videos just like this one. Nobody really likes inflation. Inflation is, of course, our money supply growing year after year. So when the United States government, more specifically the Federal Reserve, decides that we need more money in our economy, that means we need to print more money. Printing more money means more inflation because you are increasing our monetary supply, and all of the dollars that are currently in our economy are losing value. It's kind of like a supply and demand thing. If there is a lot of something, but not a lot of it in supply, then that thing is going to be valuable. However, if there is a ton of it and everyone has it or could get their hands on it, well, then that means that thing is going to be valued a lot less. So in this case, if millions of Americans have a lot more money, then that means the value of our dollars starts to go down. What that means in essence is that the buying power of your money decreases. So you will have to pay more in order to buy the same things. According to the Federal Reserve, inflation can actually be a good thing for the economy. When inflation is controlled and at a low level of around 2 to 3%, this actually means the economy is growing. Basically, what they mean by this is that there's more money in the economy. And when there's more money in the economy, that means more people have more money to spend. And if people have more money to spend, then our businesses can continue to thrive because they have more money. More money for businesses essentially means that they can grow. And when a business grows, that means hiring more people, opening up more factories, locations, etc. More jobs equals more money, and more money circulating throughout the economy. And like I said, inflation typically rises at a rate of around 2 to 3% every single year. So if something costs $1 today, that means in a year from now, it may cost you around $1.02 or $1.03. It's not really that big of a jump, but it shows that our economy is growing and eventually things cost more. It's the same reason why your grandparents could buy a movie ticket, a large popcorn, and a large drink, and it only cost them a few bucks. Today, that same ticket, popcorn, and drink would cost you around $30 to $40, depending on where you live. Inflation has increased by around 549% since 1971. That means an item that cost you only $1 in 1971 today would cost you around $6.49. The US dollar has lost around 85% of its value in the last 50 years, and inflation has gone up by around 2 times what we're normally used to seeing. In fact, in October of 2021, the Consumer Price Index was released, and the Consumer Price Index essentially measures the price of all items in every industry throughout the entire country. What it showed, though, was that inflation had rose by around 6.2% in October alone. That is more than double what we're used to seeing. And what that ultimately means is the US dollar is starting to rapidly decrease in value. And there are a lot of reasons for this. The biggest reason is the pandemic. When the pandemic first began in March of 2020, the United States had a problem, specifically a money problem, because thousands of businesses were about to close down temporarily and sometimes permanently. What that meant was thousands of employees and sometimes millions of workers were about to be out of work. No work equals no pay, and no pay means you can't buy things, so our economy was about to collapse. This is when the federal government and the Federal Reserve decided to step in and provide trillions, yes, trillion with a T, of dollars in stimulus. That means that our money supply started to increase. This was stimulus in the form of stimulus checks, direct payments to Americans, sometimes worth thousands of dollars. We also had the Paycheck Protection Program and extended federal unemployment benefits. So people were getting thousands of dollars even though they weren't working. And the federal government decided to go one step further and pause mandatory payments on mortgages and federal student loans. Federal student loan payments are still paused until January of 2022, and that means the interest as well. Americans were saving more and Americans were spending more, which has directly contributed to all of our supply chain issues that we are facing today. This is causing a lot of our inflation issues, and this is something that President Joe Biden and the chair of the Federal Reserve, Jerome Powell, have said. This is the cause of our inflation, and it's why inflation is only transitory, meaning this level of inflation is only temporary. And to be fair, the United States, and the rest of the world for that matter, has seen this level of inflation before. During World War II, the United States was at war, which meant all of the United States' resources was going towards that war. All of our shipping and food and energy resources were being reallocated towards our troops on the front lines. So rationing was common during this time. Americans could only buy a certain amount of things, and if they were allowed to buy more, that would come at a huge cost. Inflation was high during the 1940s because America was at war. Inflation was also high during the 70s and 80s in the United States. And there's a couple different reasons for this too. Wages were starting to increase throughout the United States because of labor unions. Now, one could argue that that is a great thing, but on the flip side, this also means that inflation is going to rise. Inflation was slow at that point, but as wages rose, they started to hit a level where things were starting to equal out. But like I said, inflation also needed to rise too, and the world was going through an energy crisis in the 1970s as well. There was an oil embargo that meant that gas prices were going through the roof, and it was just hard to come by in general. And finally, President Richard Nixon took the United States off of the gold standard. The gold standard meant that for every US dollar, the United States had a piece of gold waiting for you. So all of our money was backed by a physical asset like gold. If you had thousands of dollars in paper money, you could essentially go exchange your paper money for gold. But the United States was taken off of this standard for a lot of different reasons, and in this video, we're not really going to go over all of them. But what you need to know here is that it wasn't really practical for the United States' growth. The United States was essentially limited by how much gold they could produce, and gold actually takes time, energy, and money to produce. So the United States could only print based on the amount of gold that it had. So President Richard Nixon decided to take us off of the gold standard, which meant the US government could print as much money as it wanted. And eventually inflation started to go down and hit that 2 to 3% mark, which is considered healthy in our economy. But what you also had in the 70s and 80s was something known as stagflation. Stagflation is essentially when inflation is rising very rapidly, but your economic growth is not rising very fast. So high inflation, low economic growth. The Federal Reserve typically thinks inflation is good when it's at a low level because more inflation means more money, and more money means consumers have more money to go out and spend. However, during the 70s and 80s, you had some supply chain issues due to our oil embargo and an energy crisis. This meant that consumers, while they had more money, just physically could not spend more. They couldn't go to stores to buy more because there wasn't that much on the shelves. That meant that businesses weren't getting that much money, and inflation was rising too because businesses were increasing wages. And now that you know all that, a bell is probably ringing in your head because that sounds very similar to what is going on in 2021. The chairman of the Federal Reserve, Jerome Powell, the Treasury Secretary, Janet Yellen, and President of the United States, Joe Biden, have said that all of this inflation that we are facing is simply transitory and temporary because of the pandemic. The pandemic caused so many supply chain issues that there is nothing on the shelves, and consumers just can't buy anything. And when they can go buy things, the prices are way up because supply is way down. This could cause some major issues for our economy because we may hit a new level of stagflation. Inflation is starting to rise again, and consumers just can't buy anything, which means our economic outlook is going to slow down. Nobody really knows when our supply chains are going to become fully online. The United States is investing billions of dollars into expanding our ports and running them 24/7, 365 until this problem is solved. However, we also have a labor shortage that is slowing things down even further. That is all part of the supply chain. And meanwhile, Americans certainly don't want to buy less things. We saw that in 2020 when Americans were given thousands of dollars in stimulus checks. And Americans that didn't lose their job due to the pandemic were still going out and buying the same level of things. They were taking advantage of the economy as it stood. And just like we saw in World War II, the United States is funneling a ton of money and resources towards our pandemic and ending it. So instead of a war, it's a virus. But Americans are expected to still spend at record rates, and unemployment is right around 4.5% in the US, meaning there's a lot of Americans that have steady jobs, which means steady income and steady spending. That means our supply chains are going to get stretched even further, and there's one other major factor that we have no idea about right now. The World Health Organization just found a brand new COVID variant called Omicron. This Omicron variant is very new, and we don't really know much about it. This could become a huge headache for the United States and the rest of the world if this Omicron variant becomes bigger. If it starts to spread further and they find out that it's even worse than the Delta or original COVID variants, well, then that could mean the United States and the rest of the world goes back into economic lockdowns. Economic lockdowns mean that people are going to be out of jobs. Social distancing orders will be reinstituted, so people in those industries will be unable to work until things go back to normal. Now, as of recording this video, President Joe Biden said that economic lockdowns will not be necessary at this point in time, but he has not completely ruled them out if things go bad. This will ultimately affect inflation. And inflation could get even higher because our supply chains will get disrupted even more. And the Federal Reserve may have to step in even further and provide even more stimulus. So instead of trying to lower inflation in 2022, they may ultimately start making it bigger. And we just don't know what that would look like because the Federal Reserve and the federal government has already printed more money than we have ever seen to combat a crisis like this. Around $10 trillion, in fact. That's between all of the bond buying and stimulus that the United States has done over the last 2 years. The Federal Reserve also decided in 2020 that it was going to lower its benchmark interest rates to around 0%. Now, when the Federal Reserve decides that it's going to lower its benchmark interest rates, that means it's trying to incentivize people to borrow more money. It makes it a lot easier for banks and other financial institutions to lend to more people because interest rates are so low. And people have a lot more access to money. They can go out and get a loan that they otherwise wouldn't be able to afford because interest rates are so low. And that's why we saw auto loans and mortgages explode in 2020 and in 2021. The Federal Reserve has tried to combat inflation by stopping a lot of its direct stimulus. So stimulus checks and extended unemployment benefits ended by September of 2021. In addition, we saw the Federal Reserve come out and say that it would stop its quantitative easing on Wall Street sometime in July of 2022 and would start tapering it off in November of 2021. Quantitative easing is when the Federal Reserve directly enters the market and starts buying bonds and treasury notes on Wall Street. This is all in an effort to boost up the New York Stock Exchange and start funneling money into it so it doesn't crash. Again, that is all in an effort to keep our economy alive. But it also means that inflation has gone through the roof, and we haven't really quite felt all of the effects of all of this money printing just yet. Most of the inflation that we feel is because of our supply chain issues. So the question here is this: is this level of inflation temporary, or is there nothing we can do? Well, there is always something that can be done about inflation. But remember, with every action comes consequences. No matter what you do, someone is going to have to pay for it. And this is exactly what Phil Orlando from Federated is saying. Phil Orlando is saying that the Federal Reserve recognizes that inflation is way too high right now. The Federal Reserve has even come out and said that inflation is a bit higher than even they expected it to be at this point. So Phil Orlando has said that the Federal Reserve won't just raise interest rates one time in 2022, which is what their current plan is. They will raise interest rates a whole 6 times between now and 2024. This means that they will come out and essentially completely stop people's motivation to go out and spend money. So if people have less access to money, you're going to see a variety of things. For one, you will see mortgage rates completely drop off in the United States. They may return to levels that we saw pre-pandemic, or they may start to shrink even more. This means the real estate market is going to take a hit. But it will also mean that people are spending a lot less money, and there's a lot less money circulating throughout the economy. Auto loans and student loans will follow the same path. However, when people stop spending money, that is ultimately going to affect Wall Street, because a lot of these big banks aren't making as much money as they could through loans, especially mortgages. That means a lot of our mortgage-backed securities on the New York Stock Exchange and these businesses and banks that benefit from them are going to start going down. Stock prices may decrease because profits and revenue are starting to go down. That means investors are pulling their money from those stocks. So the real estate market and the stock market are ultimately going to take a hit as we battle inflation. Ultimately, though, prices may start to level off as demand starts to go down in the United States and our supply chain begins to improve. However, the Federal Reserve needs to be very careful about how it increases interest rates, because if it does it too fast, then this means that too much money will get pulled all at once and markets could crash. But if it does things too slow, then inflation will continue to get out of control and the value of the US dollar will continue to drop at record rates. Ultimately, that could lead to hyperinflation, something that Jack Dorsey already believes is here. I talked all about Jack Dorsey's thoughts on inflation in another video, and if you want to see that entire thing, I will leave a link to it in the description below. But in a nutshell, Jack Dorsey believes that hyperinflation is here, and the reason for this is because our supply chain issues are not going away anytime soon. Our supply chain was already very tightened even before the pandemic, and our labor issues weren't very far behind. Now that our economy is beginning to change, that means a few different things. For one, wages are starting to increase throughout the United States because of inflation. And two, people are starting to realize that they don't just want a job anymore. They want a career and they want to work for someone or something that they truly are passionate about. Number two, there is only so much space in our ports and on our roads for deliveries. So as Americans demand more, our supply chain just can't keep up. Some experts believe that that may never go away. Many experts do believe that our supply chain issues will eventually fade sometime in 2022 or in 2023. But if the Federal Reserve doesn't act fast enough, then we may hit a period of hyperinflation, meaning the value of our dollars goes down so fast that buying everyday normal things is going to cost you an extreme amount of money. Think of post-World War I Germany here. People literally had to have wheelbarrows full of cash just to go to the store to buy one loaf of bread. We are definitely not at that point yet, but the United States has never thrown this much money at a problem before, so nobody really knows what's coming next. And like I said, nobody really knows what's going to happen with this new Omicron COVID variant. If that gets way out of control, the United States could shut down, making our supply chain worse, making inflation worse, and ultimately leading to a period of more inflation and more stimulus from the Federal Reserve. Monetary policy is important. We talk about it all the time on this channel, and money printing is important too. All of this is very fragile, and it's not just about money printing, it's about everything else that goes on in the world. And ultimately, it is way too early to tell if inflation is completely transitory. Ultimately, most experts believe that it's somewhere in the middle. It's not completely transitory, but it's not really here to stay either. So this level of inflation may continue for a long period of time because the Federal Reserve hasn't really done much to stop it thus far. The Federal Reserve is essentially in belief that the United States and our economy is going to recover. However, if things don't go exactly as planned, then inflation is going to run away and we're going to start to see it rise to new record highs. The Federal Reserve could be right about inflation. They could also be very wrong, but the problem is we won't really know until it's far too late. So while inflation isn't really anything new in the United States, the level of inflation that we're facing right now is definitely different than what we've faced in the past. And ultimately, something has got to give in 2022. But now I want to hear from you on this issue. What do you think about inflation in the United States? Is the Federal Reserve going to step in and start making some monetary policies to combat inflation faster in 2022? Or are we going to see inflation continue to rise and a slow response from the US federal government? In addition, are we already too late to combat inflation? And is hyperinflation coming next, like what Jack Dorsey thinks? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.